Hey guys, welcome. In this video, we'll be looking at market structure and direction and how you can utilize it as a profitable trading strategy. A lot of people get confused when it comes to market structure, and that's because they distract themselves by focusing on a lot of time frames. For instance, when they arrive at the bias on the higher time frame, they are thrown off balance when they see different structure on the lower time frame. As you can see on the screen right here, this image on the right is a lower time frame and this image on the left is an higher time frame. And you can see right here on the lower time frame, we can see a different market structure right here, which is indicating that price is bullish, while on the higher time frame we can see that market structure is actually bearish, saying that we have taken this particular swing low right here. So this particular kind of movement is bound to happen because price is fractal in nature. In other words, price delivery is different across various time frames. So with that in mind, here's the secret or an idea I want us to have at the back of our mind when trading market structure. The greater encompasses the lesser. And that means the higher time frame tells us about price action objective, while lower time frame is a subject to that narrative or objective in price. So whatever the higher time frame is predetermined to do, we want to see and wait for the lower time frame to align with that particular narrative. Note, higher or lower time frame is relative to the type of trader you are. So here's a time frame breakdown I have outlined that you can actually start with or begin to work with. So we have the monthly, weekly, and the daily. In other words, you're starting at the monthly time frame as your higher time frame, the weekly time frame as your intermediate time frame, and the daily time frame as your execution time frame. Why on this other one we have the weekly, the daily, and the 4 hours. So you're starting on the weekly as your highest time frame, the daily as your intermediate time frame, and the 4 hours. Why this other end we have the daily time frame, the 4 hour, and the 1 hour. So the daily is the highest time frame, 4 hours, the intermediate time frame, and the 1 hour you're looking for that time frame to execute. So the next will be the 4 hours, 1 hour and 15 minutes, which will be the 4 hours will be your highest time frame, 1 hour will be your intermediate time frame, and 15 minutes will be your lowest time frame. Now the last on this particular structure board is 1 hour, 15 minutes, and 5 minutes. So the 1 hour be your highest time frame, 15 minutes be your intermediate time frame, and the 5 minute be your execution time frame or your lowest time frame. So you can either take any one of these particular time frame breakdown depending on the kind of trader that you are, but you want to understand what the highest time frame is actually indicating, and you want to stick with that particular narrative, that particular bias, and look to see the lower time frames align with that particular objective or narrative that the highest time frame I've actually outlined. So without further ado, let's go to the chart and see examples. So right here is an example on the Euro USD on the daily time frame. So we can see on this particular region that price has started to make higher highs, higher low, higher highs, and higher low right here. So based on market structure, we can already indicate and identify that we are in a bullish trend. But with the look of price, we can see price has taken a swing low right here. So a lot of people will be moved to think that price will start selling from that particular region, especially after we have seen price sell with this great degree of momentum right here. And with more confirmation, we can see how price has retested this particular institutional swing point. So everything from this particular point in price action is pointing that price is meant to go bearish. And dropping down to the lower time frame, which is the 4 hours, we can even see that the market structure is actually bearish. So at this point, a lot of people will be actually confused. But this is something I want you to take note of when looking at market structure. Coming back to the higher time frame, which is the daily time frame, I want us to be focused on this swing high and this particular swing low, because price move in swings and ranges. So the moment price took out this particular structure high right here and gave us this move to the buy side, this swing high to this particular swing low became a dealing range for price to trade within. So until price defiles this particular swing low, we are still in a bullish trend on the daily time frame. So that is the perspective I want us to have, which is price moves in swings and ranges. So this push to the buy side is a swing right here. So price going to move within these swings, and all price is actually doing right here is actually reaching for deeper discount. And this particular run on low we can see right here is not a break of structure or a market structure shift. That is just a reaccumulation of price or liquidity sweep. And going forward, we can see how price delivered all the way to the buy side. So here's another piece of price action on Euro USD on the weekly time frame. So right here, we can see we have a break of structure right here and also a market structure shift. And going forward to the buy side, we can also see we also have a break of structure right here to the buy side. So at this point, a lot of people would actually be confused on what to do. But like we saw in the previous example, price moves in swings and ranges. So this particular swing high to this particular swing low have not been invalidated. As you can see, price has not actually taken this swing high that pushed price to this particular break of structure right here. There are chances that price is just giving us a liquidity sweep right here. And if we drop down to the daily time frame, we can see that we have more bullish structure all the way to the buy side. So a lot of people would even be more convinced that the market structure has actually changed. So going forward in price, let's see what price does. Right now on the daily time frame, we can now see that market structure has shifted all the way to the sell side. And based on the idea we outlined earlier, the greater encompasses the lesser, meaning that the higher time frame tells us the objective and the lower time frame is subjective to that particular narrative. So seeing that price action on the daily time frame has shifted structure to the bearish side, aligning with the market structure from the weekly time frame, we can now confidently expect price to keep going lower. So let's see what price does. And there you have it. So you can sell price delivered all the way to the sell side. These are you can go on to apply market structure in your trading using this particular idea shared in this video. So this is just the first part series of the market structure series we're going to be kicking off in this channel. As in this episode, we focused more on swing ranges to qualify if a trend or a market structure has changed. Going forward, the subsequent episode, we're going to be covering other aspects of market structure that's going to help us time reversals, be more confident in catching retracements even when it looks like a break of structure. If that's what you're interested in learning and you find value in today's video, hit the like button, hit the subscribe button, and see you in more videos.